Hello traders, welcome back to Sora Trades. Today we'll be diving into a detailed technical analysis of the S&P 500 ETF, SPY. We'll identify key support and resistance levels, discuss potential trading strategies, and outline a detailed trading plan for both long and short positions. Starting off, we're analyzing the daily chart of SPY. As we can see, SPY has been in a consistent uptrend, indicated by the ascending 20-day EMA, green line, 50-day SMA, blue line, and the 200-day SMA, red line. Currently, the price is trading above all three moving averages, signaling a bullish trend. The relative strength index is at 5890, showing some bullish momentum but not yet overbought. The MACD histogram is positive, indicating that the short-term momentum is in favor of the bulls. Now, let's break down the key support and resistance levels. Starting with support, the first significant level is the 20-day EMA, which is currently around $563. This level has provided strong support in the recent uptrend, and a break below this could signal a potential shift in momentum. The next major support comes in at the 50-day SMA, approximately at $551.13, a level that could serve as a cushion if the 20-day EMA fails to hold. Lastly, the 200-day SMA around $519.48 is the ultimate support level, marking a critical point for the long-term trend. On the upside, the immediate resistance is the previous swing high around $570. A break above this level would indicate a continuation of the bullish trend. If SPY can close above $570 with volume, it could pave the way for a move toward the $580 to $590 region. For those looking to go long, the strategy revolves around these key support levels. If SPY pulls back to the 20-day EMA at $563 and shows signs of a reversal, that could present a buying opportunity. A stop loss could be placed just below this level, around $560, to manage risk effectively. If SPY breaks below the 20-day EMA but finds support at the 50-day SMA around $551, this would serve as a secondary buying opportunity. Again, a stop loss can be placed slightly below the 50-day SMA to protect from further downside. Now, if you're considering a short position, you'll want to focus on the key resistance levels. A short opportunity could arise if SPY fails to break through the $570 resistance level and begins to show bearish reversal patterns, such as a double top, bearish topping tails, or bearish engulfing candles. In this case, a stop loss could be placed just above $570, limiting the risk if the price attempts another breakout. If you like to trade options, then consider joining our Patreon trading group to get our options trades every day. Join us using the link in the description. Alternatively, if SPY breaks below the 20-day EMA at $563 with high volume, it could signal a potential downtrend. A short position could be initiated here with a target of the 50-day SMA around $551. It's crucial to adjust stop-loss levels according to these moving averages to minimize risk. For long positions, initial targets would be around the $570 resistance level, and if that breaks, we could look toward the $580 to $590 range as a more extended target. Short positions, on the other hand, would aim for the 50-day SMA at $551 initially and possibly the 200-day SMA at $519 if the bearish momentum accelerates. Remember, risk management is key. Always use stop-loss orders to protect your capital and ensure your risk-to-reward ratio aligns with your trading strategy. In summary, SPY is currently in a strong uptrend, with key support levels at the 20-day and 50-day moving averages. For long positions, buying at these support levels with tight stop losses is a strategic approach. For short trades, watch for bearish signals at the resistance around $570 or a breakdown of key support levels. As always, stay disciplined with your trading plan and manage your risk effectively. Moving on to the daily chart of QQQ, we can observe a strong upward trend, supported by the ascending 20-day EMA, green line, the 50-day SMA, blue line, and the 200-day SMA, red line. Currently, QQQ is trading above all three moving averages, suggesting that the market remains in a bullish stance. The relative strength index, RSI, is not displayed here, but the MACD histogram below indicates positive momentum, showing that the bulls are still in control. Now, let's identify the key support and resistance levels. For support, the immediate level to watch is the 20-day EMA, which is currently around $478. This level has consistently acted as a dynamic support during the ongoing uptrend. If QQQ fails to hold above the 20-day EMA, the next support comes at the 50-day SMA, currently sitting around $467. A break below this level could indicate a potential change in trend, making it a crucial area to watch. The 200-day SMA, at approximately $447, represents the long-term support level. If the price drops to this level, it could present a buying opportunity for long-term traders, provided there are signs of a reversal. On the resistance side, QQQ is facing immediate resistance around the $485 to $490 region, which corresponds to recent swing highs. A successful breakout above this level with high volume would signal a continuation of the bullish trend and open up the potential for a move toward the $500 psychological. For those looking to go long on QQQ, the primary strategy revolves around the key support levels. An ideal entry point would be a pullback to the 20-day EMA near $478, provided there is a confirmation of a bullish reversal pattern, such as a hammer or bullish engulfing candle. In this case, a stop loss could be placed slightly below the 20-day EMA, around $475, to manage risk. If QQQ breaks below the 20-day EMA, the next long entry would be at the 50-day SMA near $467. Again, look for signs of reversal at this level before entering and set a stop loss just below the 50-day SMA, around $464. For those considering short positions, patience is key. A short trade could be initiated if QQQ fails to break through the resistance around $485, $490, and start showing bearish reversal signals, like a double top or bearish engulfing candles. In this scenario, a stop loss can be set just above the resistance level at $490. Alternatively, a more aggressive short trade could be considered if QQQ breaks below the 20-day EMA at $478, with significant volume signaling potential downside momentum. In this case, the target would be the 50-day SMA at $467, and a stop loss could be placed just above $478 to minimize risk. For long positions, the initial target would be the recent high around $485 to $490. If QQQ can break through this resistance, the next target is the psychological level of $500. On the downside, short trades would target the 50-day SMA at $467 initially, and possibly the 200-day SMA around $447 if the downward momentum continues. Risk management is crucial. Always use stop-loss orders to protect your capital and ensure your risk-to-reward ratio is favorable for each trade. This discipline will help navigate the market volatility effectively. In summary, QQQ remains in a bullish trend, with key support levels at the 20-day and 50-day moving averages. For long positions, buying near these support levels with proper risk management could provide profitable opportunities. For those looking to go short, the $485, $490 resistance and a potential breakdown of support levels are critical areas to monitor. If you enjoyed this analysis, please give this video a thumbs up and subscribe to the channel for more market insights and trading strategies. Drop your thoughts on QQQ or the S&P 500 in the comments, and as always, happy trading.